Hi, Mark Anderson here, mortgage banker with Paramount Bank. I'm licensed to lend in all 50 states, and I would love the opportunity to earn your business. If you would like me to take a look at your refinance scenario, your purchase mortgage scenario, please do call or text me at the number below anytime. All right, for today's mortgage rate update, I'm going to keep this relatively brief. The news is good overall. It looked like for a moment there in the market that we may be seeing a push back toward higher rates. But that situation kind of resolved itself within about a day, and we're now seeing very, very solid performance in the mortgage bond market, which is helping us to stay at the lowest level that we've seen rates over the last 90 days, probably in recorded history. So what we've got today, we've got a mortgage bond price level above 104.5. Now, 104 on this 2.5% coupon was kind of a dividing line, and as soon as the bond prices were sustained above this 104 level, that's when we saw the rates drop. It took a very long time, and actually it took the bond staying stable at that price before we saw the low rates that we see right now, and before those low rates were sustainably that low without all the volatility that we've experienced in prior months. So the news is good. One of the things to watch is any news about mortgage defaults. So one of the reasons why rates were maybe not as low as they should have been based on the market fundamentals is that lenders, the big servicers that hold a lot of these loans on their books, they face risk in the case of mortgage defaults. Banks do not win on defaults. They lose big time. And it looked like the default figures were going to be very, very bad. Now, the numbers are still bad, but they've gotten a lot better. So applications for new forbearance requests, actual slow pays, actual defaults, those numbers have dropped pretty precipitously over the past week or so, and the industry is paying attention to that. Arguably, they're paying more attention to that because it's a risk factor that actually costs them a significant amount of money and causes them to increase the margins on the rates that they're offering. They're probably watching that more than they're watching the day-to-day bond price changes. One thing to keep in mind as far as the bond market is concerned, and this is just something to look out for, the one piece of news that would have dire consequences for increasing mortgage rates and being bad for bond prices is if the Federal Reserve takes a step back on the bond buying program, that could spell the end of the low interest rate environment that we're in right now. So I would say get in while the getting is so good. Rates have not been better than where they're at right now. Whether it's a refinance or a purchase, now is the time to lock in. A couple things I'm going to talk about just briefly. Turn times. Okay, refinances, I'll be dead honest with you. They are taking much longer than I would like to get to closing. The issue that we're running into right now, it's kind of a perfect storm of a lot of different factors. Number one, we've got COVID. That has in itself made the process of actually underwriting a file more complicated than it was in the pre-COVID days. There are extra verifications that have to be performed. There's additional review of the file. There's an extra layer of, say, employment verification that's kind of stacked on top of everything else. And that last employment verification actually has to be done right before closing. So it's made files a little bit trickier to process. Number two, we've seen the lowest rates in history. And unlike previous low rate cycles, these rates have stuck around now for months. Yes, there was some volatility, especially toward the time when the rates first dropped. You had big swings, but we've now sustainably been at rates that we've never seen before. We've been really solidly in this pattern now for, I think we've basically been at stable prices now for about a month. That's unprecedented. And it means, I think the industry is basically in the process of refinancing America. So you've got a ton of mortgage applications going on to the system. And then number three, one of the things about COVID it's been surprising to me. I thought that the concerns about the virus, the shutdowns, et cetera, I thought that would have a very deleterious impact on purchase business. If anything, it's been exactly the opposite. The number of people that are calling me looking to get pre-approved and the number of people that are landing contracts is very, very high right now. And there's another factor dovetailed with that makes closing refinances a little bit tricky and makes that process take longer than anybody would like. And that is the fact that it's a very competitive market from a buyer standpoint, which means if a property comes on the market, it's well priced, it's a property in good condition, that property is going to have a lot of interest. And so many of the buyers that I'm doing loans for right now, they're telling me that there were 5 offers, there were 10 offers. One the other day, 17 offers on a property. And what that means is that there really is just way more buyer demand than there are properties for sale. So you have a situation where these sellers are being very picky about what contracts they're choosing. They're not just looking at price, they're also looking at time. And so if you've got somebody that has a contract that says they're going to close in 25 days, the seller is going to zero in on that offer and take that offer very seriously. What that's done, almost every purchase application that I've received over the last 2 months has been closing in 30 days or less, or thereabouts. Very, very quick timelines. Now, in a normal market where we don't have the hugest amount of refinance volume that really we've ever seen, in a normal market environment, I've kind of made a name for myself as the lender that can get it done as fast as you need. I had a transaction last December that closed in, I think, 11 days. I picked up the pieces where another lender had kind of fallen short and screwed some things up. It's always been a point of pride to me that I can be the guy that you can bring a loan to that needs to close very quickly. Right now, what it does is I'm not turning that business down, but those files end up having to jump ahead in line, ahead of refinance applications. And the reason for that is very simple. You've got a contract. Our job for our purchase clients is to make sure that they are able to secure that property, that they don't lose that property. And if they've got a legally binding contract that says that they're closing in 28 days, and I take on that loan, it means we got to close them in 28 days. So it's made it very difficult to manage the timelines. Now, everything is getting done. I mentioned in the previous video that I did last week that my company's taking responsibility for any extension costs associated with pushing these closing dates out on the refis. We're going to get them done. It's just a matter of working its way through the system. Now, I'm working on a visual that I'm going to share in the next video to kind of walk through like what goes on behind the scenes, how files are managed, just to sort of visualize what we're working with and some of the challenges that we're working through just due to the heavy volume that's coming in. So I'm going to leave it there. Rates look very, very good still. They appear to be stable. Now it's definitely a good time to lock in an interest rate. Please do call or text me at the number below anytime. I'd be happy to talk to you about your scenario. No pressure, no obligation, no high-pressure sales tactics coming from me. Please do like the video, subscribe to my channel, and please do share this content with anybody that you think may find it useful. Thank you very much.